The stock market has been quiet, but Klarna just changed that. The Swedish payments giant's IPO on September 10, 2025, is the biggest of the year. Investors and shoppers are buzzing. This is a huge test for the buy now, pay later industry. Klarna's first day on the New York Stock Exchange was a smash over $1.3 billion raised, shares jumping 30% at open. After tough years for tech, this feels like a fresh start and could open the door for more IPOs. This isn't just about Klarna, it's about the health of the entire tech market. Why all the hype about BNPL? It lets you buy now, pay over time, often with no interest. BNPL exploded during the pandemic, but rising rates and recession fears made people question if it would last. Klarna's IPO is the ultimate test. Is BNPL here to stay? The excitement says yes. Investors see Klarna as a major player in the future of shopping. With millions of users and hundreds of thousands of stores, Klarna's strong debut signals fintech is back in favor. This IPO marks a turning point for Klarna and the BNPL sector. It's a comeback story, and it's just beginning. We'll break down what this means for investors and shoppers alike. Subscribe for more on Klarna's journey and the biggest stories in tech and finance. Klarna's IPO is a signal public markets are ready to bet on fintech again. The BNPL industry's fate is tied to Klarna's success. Will this be the spark for a new wave of tech IPOs? Let's dive in. Klarna began in Sweden in 2005, aiming to make online shopping easier and safer. Its founders wanted a smoother checkout. No more entering credit card details every time. Klarna grew steadily in Europe, earning trust from shoppers and stores. Unusually for a tech company, Klarna was profitable for its first 14 years. This strong start fueled global expansion, especially into the US today. Klarna is a global fintech powerhouse. Its signature product? The Pay in 4 plan. Pay 25% at checkout, then 3 more payments every 2 weeks. No interest if you pay on time. Klarna also offers longer-term financing for bigger purchases, sometimes with interest. Its popular app acts like a digital mall. Browse, create wish lists, track packages, and get exclusive deals. Over 111 million customers and nearly 1 million merchants use Klarna worldwide. Klarna's network is massive, processing over $100 billion in goods, showing just how embedded it is in shopping. The average Klarna purchase is about $101, proving it's used for everyday buys, not just big-ticket items. Klarna's journey is a case study in how fintech is changing the way we shop. It's more than a payment button, it's a global shopping ecosystem. Klarna's growth shows the power of a simple idea executed well. Its app keeps users engaged, even when they're not buying. Klarna's story is about making shopping seamless and accessible, and it's just getting started. Klarna's value has soared and crashed in just a few years. In 2021, Klarna was a tech darling, valued at $45.6 billion after a SoftBank-led funding round. The BNPL market was booming, and Klarna was leading the charge. But by 2022, rising inflation and interest rates made investors nervous. Klarna's US expansion was costly, and losses mounted. Its valuation plummeted to $6.70 billion, a stunning 85% drop. This was a wake-up call for Klarna and the entire BNPL industry. The company shifted focus from growth at all costs to profitability. Klarna cut costs and streamlined operations, proving it could adapt. Fast forward to 2025, Klarna's IPO values it at over $15 billion, jumping to nearly $20 billion after its first trading day. It's a strong rebound, though still less than half its 2021 peak. Klarna's journey is a lesson in tech's volatility and resilience. Investors are now more realistic, betting on Klarna's future at a more measured price. The roller coaster ride highlights the risks and rewards of fintech. Klarna's comeback shows it can survive and thrive through market swings. The company's ability to pivot is key to its renewed investor confidence. Klarna's story is a snapshot of the tech sector's highs and lows. The market is watching. Can Klarna keep climbing? Only time will tell. Klarna isn't alone in the BNPL race. Its top US rival is Affirm, a public company with a market cap around $28 billion, slightly bigger than Klarna. Klarna focuses on smaller, frequent purchases, average $101, while Affirm targets bigger buys like mattresses and electronics, average $276. Affirm's plans often include interest and longer terms, making it more like a traditional loan. The two companies compete but often serve different shopping needs. Affirm's stock has surged over 40% this year, showing strong investor interest. Afterpay, once a major Australian BNPL player, was acquired by Block, formerly Square, for $29 billion in 2021. Now, part of Block's ecosystem, Afterpay is offered to millions of Cash App users and merchants. Afterpay's model is similar to Klarna's Pay in 4. The BNPL market is crowded. Apple, credit card companies, and banks are all launching their own installment plans. Klarna's edge? A superior app experience and a strong brand. The competition is fierce, and Klarna's IPO is its latest move in this high-stakes game. Standing out is harder than ever. The battle for BNPL dominance is far from over. Klarna's next moves will be crucial. Investors want to know, is Klarna profitable? After years of global expansion and mounting losses, Klarna has turned things around. In Q2 2025, Klarna reported $823 million in revenue and an adjusted profit of $29 million. This return to profitability was key to its successful IPO. Klarna's focus on efficiency and cost control paid off. Another critical metric: delinquency rates. Klarna's Pay in 4 loans have a delinquency rate of just 0.89%, and longer-term loans are at 2.23%, both lower than credit card averages. This shows Klarna is lending responsibly, and its customers are reliable. Positive financials gave investors confidence in Klarna's future. The company has proven it can grow and manage risk. As a public company, Klarna will face new scrutiny every quarter. The pressure is on to keep delivering profits. Klarna's financial turnaround is a major milestone. We'll be watching to see if it lasts. How does BNPL work in 2025? It's simple. At checkout, you choose Klarna, provide basic info, and get a quick approval. No impact on your credit score. For a $100 purchase, you pay $25 now, then 3 more $25 payments every 2 weeks. Your item ships right away, and as long as you pay on time, there's no interest or fees. BNPL is popular, especially with younger shoppers wary of credit cards and high interest rates. The fixed payment schedule makes budgeting easy. BNPL offers flexibility and control in a world of rising prices. People use it for everything from fashion to electronics to groceries. It's now a normal part of online shopping for millions. BNPL's deep integration with e-commerce keeps it strong, even after economic turbulence. The average order size shows it's used for both small and big purchases. BNPL has changed how a generation thinks about paying. It's here to stay. As BNPL grows, regulators are paying attention. The UK and US are considering stricter rules to protect consumers, like better affordability checks and clearer terms. Critics worry BNPL makes it too easy to overspend and juggle multiple loans. Companies argue their low delinquency rates prove responsible lending. Still, shoppers need to remember, BNPL is debt. Missed payments can mean fees or hurt your credit. The challenge is balancing innovation with protection. As the industry matures, expect more rules to keep it fair and safe. Klarna wants to be more than a payment button. It's building a full shopping and banking ecosystem. Its app is a digital mall and shopping assistant, helping users search, compare, and discover products. Klarna is now a licensed bank in Europe and is bringing banking products to the US, including the Klarna card, a debit card for both online and in-store purchases. The card already has 700,000 US users, with millions on the wait list. Klarna is also launching personal deposit accounts, moving deeper into banking. The focus is on adding value for existing users, not just chasing growth. By offering more tools and services, Klarna aims to become indispensable in users' financial lives. Its future depends on executing this vision and convincing users to make Klarna their go-to for shopping and banking. So is BNPL still a winner in 2025? The answer, yes, but with caveats. Klarna's IPO shows strong investor confidence and proves BNPL is more than a trend. The industry is resilient, profitable, and deeply integrated into shopping. But risks remain: regulatory scrutiny, fierce competition, and the temptation for shoppers to overspend. For investors, the focus is now on sustainable profits, not just growth. For shoppers, BNPL is a valuable tool, if used wisely. Klarna's comeback signals the industry is here to stay, but the journey is far from over. Subscribe for more analysis on Klarna and the future of fintech.